Good morning. This is Arlan Suderman, Chief Commodities Economist at Stonex, coming to you from the trading floor this morning. It's about 8:45 a.m. on Friday, June the 20th, and I wanted to cover a few things here as we wrap up the week and head into the weekend. We can monitor the headlines as they continue through the weekend while the markets are closed. Overall, as we look at, first of all, let's go back to Wednesday since we were closed yesterday for the Juneteenth holiday. We had the Federal Reserve meet and released their statement on monetary policy on Wednesday afternoon. And then monetary policy, there's really no surprises there, and none were really expected. That we didn't expect the Fed to change interest rates at this meeting or make any other significant policy changes, and it didn't. The real focus was on Fed Chair Jerome Powell's comments in his press conference, as well as the economic analysis and the dot plot graphic that came out after the meeting. And basically, that dot plot showed the positions of the 19 members of the Federal Reserve and where they think interest rates will be at the end of this year and the next year, et cetera, et cetera. And it basically showed continued expectations for 2 rate cuts through the end of the year, but without a lot of conviction. In fact, 7 of the 19 members don't see any rate cut this year at all. So there's a little bit of a lack of conviction there that we're going to see a rate cut this year. And so the Fed just continues to wait on the hard data, so to speak. Now, their projections show a slowing economic growth as we go through the rest of the year. It shows inflation coming back as a result of the tariffs. It generally shows a softening jobs market. And so the overall tone during the press conference was the Fed Chair Jerome Powell tried to reflect somewhat of a dovish tone, but there were frankly times when he had difficulty doing that. And he's really admitted that they don't know what the effects of the tariffs are going to be. They expect them to be inflation. They don't know what the effects of the one big beautiful bill, as President Trump tries to call it, will have on the economy. They don't really know the effects that the Iran-Israel war will have. They're just waiting on the data. They're kind of guessing just like everybody else, so to speak, leading from behind, if you will. I'll use that because that's tends to be their mode of action, is wait until the data shows it and then react to that. And that's what they're continuing to do. And so we, again, don't expect anything before September from them, if then. And it's going to come down to the data. And they have specific data points that they're following. They do expect the unemployment rate to tick up to 4.5% by the end of the year, up from 4.2% this year. They expect the GDP to slow down to about 1.4% overall. That's their expectations. They're expecting inflation to tick a little bit higher, but they're waiting for direction because they see both inflationary and job risks kind of in balance with one another. And so if they cut too soon, they're worried about inflation spiking even more. If they don't cut, then they worry about the employment situation. So they're just going to wait and see, so to speak. Now, let's go back to the Iran-Israel war. Israel has the upper hand here. The longer this goes, each successive week that this goes, and we're now into week 2, this is the 8th day of the war. Politicians haven't officially called it a war, but try to tell that to those who are in bomb shelters seeking safety, that this is not a war. It's a daily barrage of attacks from both sides going on here. Israel has the upper hand, and the longer this goes, the more likely it is that Israel is able to destroy Iran's nuclear capabilities and that we get regime change. Israel's focusing on military targets, nuclear targets, and the Revolutionary Guard, and basically sending a message to the regular military is you have a choice: side with the current regime or side with us. And if you side with the regime, then once we get done with destroying the Revolutionary Guard, we'll go and we'll start attacking you. If you side with us, then we will leave you be so that you can help with an orderly transition to a new regime when and if this one is gone. And so that seems to be what Israel's philosophy is going forward. Iran wants a diplomatic solution. Of course they do, because they're getting pummeled pretty hard. Um, but they have said we are not going to talk about dismantling our nuclear program as long as the shooting is going on. Israel sees no need to quit when they have the upper hand, kind of similar to what Russia is in Ukraine right now. Russia sees no reason to quit with Ukraine as long as they feel like they have the upper hand. And so Israel continues to strike. The United States and Israel both made pretty clear that they're not going to accept a peace agreement without the dismantling or total surrender, if you will, of Iran's nuclear program. And other countries, particularly European countries and some other regional countries, seem to be supportive of that, although most countries are remaining pretty quiet. Iran has refused to give up its nuclear program, so that seems to be one key. Now, yesterday we did see Chinese President Xi Jinping call Russian President Vladimir Putin to talk to him about the conflict, in addition to other things, in encouraging Putin to influence Iran toward a diplomatic solution, because both of these countries would really like to see something diplomatic. Here is the concern for them going forward. We've had this axis of countries, which included China, Russia, Iran, and North Korea. They have been working in cooperation with one another. In fact, Iran's been supplying many of the weapons for Russia's war against Ukraine. They do not want to see Iran's regime fall to a more Western-friendly country, friendly government. And so they may have to get involved if they fear that would happen. Russia really doesn't have the resources to get involved with its resources being tied up in Ukraine, and it has its own inflation problems and recession problems in its own country to worry about. China really doesn't want to get involved either, but it may feel like it has to at some point. Now, one of the positives out of this conflict from China's standpoint is the war between Iran and Israel has required that the United States pull assets out of the Indo-Pacific area, where China saw them as a threat to its objectives. And so the U.S. has been pulling military equipment into the Middle East out of that Indo-Pacific region. For defensive purposes, it states a lot of the weaponry there could be used to help shoot down weapons, missiles, etc., while also helping to protect the extensive amount of U.S. assets that we have in the Middle East region. So this goes on. The longer it goes on, the more risk there is that it could spread to a broader conflict, spread to energy assets, as well as more fertilizer assets. Fertilizer has already seen a significant decline in output from the region, oil less so to this point, but that risk to something happening to the Strait of Hormuz, where a fifth of the world's crude oil moves through, continues to be a risk that we're monitoring going forward, something the energy markets are keeping a close eye on. We did see crude oil prices trade up next to the recent highs overnight, trade back down to mixed this morning overall. But this is something we'll be continuing to watch through the weekend. We'll be back with you next week to talk about. When you look at the ag commodities, we saw the wheat under some seasonal harvest pressure over the weekend. Harvest should pick up in the southern plains now. We're finally drying out. We are seeing some quality issues, particularly in the southwestern plains, where wheat streak mosaic was a significant disease problems, where we're seeing some extremely low test weights coming out of there. We'll continue to monitor that and should get a good feel over the weekend on the quality of the wheat being harvested as momentum starts to pick up. But that was a little bit of seasonal harvest pressure overnight that we saw in wheat. Soybeans continue to find support from the RVO program announced a week ago by the EPA. That's the biofuel blending mandate. Soy oil continuing making new highs overnight once again, continuing to provide support for soybeans. And we're also seeing a little bit of risk premium being put in the new crop contracts for both corn and soybeans. Not a lot, but a little bit in there, a little short covering. And it basically comes as we start approaching the July and August period, the big critical reproductive phases for these crops is corn first, followed by soybeans. The longer range weather models have been forecasting a high pressure to set up over the Midwest with a hot, dry bias over particularly central and western parts of the Midwest for the past 2 months. And they've been wrong for the past 2 months. That pattern has never moved forward into the 2-week forecast. And they continue to show that. And if that would happen, that would start to get traders excited about the risks, because even with the big corn acres this year, just a fear of a 5% drop in national average yield would likely require a need for rationing demand, or a perceived need to ration demand. And soybeans with the lower acreage planted, even more concern there. And especially now after we have the RVO blending mandate on biofuels, which utilize soy oil. So not a lot to get concerned about yet until that moves into the 2-week period. Maybe it never will, and we'll grow stocks for both corn and soybeans this year with just a wonderful growing season. But the odds are elevated that we will see it happen at some point. We just don't know for sure if it will happen and how extensive it will be. So far, the high pressures have been pretty transitory. Over the coming week, though, we do see heat really get established in the Midwest. It is expected to move out and moderate as we go into July. But something that traders will be watching, particularly at the updated models over the weekend. So that's all I have for today. Be sure to like and subscribe if you want to continue to get these updates from the trading floor. I'll be back with you next week to go over the latest developments and all of these factors impacting the commodity markets. Have a good weekend.